Hi everyone, Happy New Year. Welcome to 2023. We hope you've had a great break. We know we have, and we're getting back into the swing for the new year. Already this year we've had a large number of calls from clients looking to talk to us about their interest rates. And there's varying levels of concern or anxiety about interest rates and affordability of home loans. And that's not surprising because home loan rates a year ago were sitting between 2 and 2.5%, and now they're sitting at 4.5 to 5%. So that's a fairly big difference. So this video will share with you what we know about interest rates and what we've been able to glean from the economists at the big banks who know a lot more about these things than we do. So here goes. Well, all four of the big banks are predicting that interest rates will continue to rise in the first half of this year. And they're predicting rate rises of between 50 and 75 basis points. In our language, that means that we can expect to see home loan rate rises of between 0.5% and 0.75%, and home loan rates sitting between 5 and 5.5%. Now, one of the biggest factors on interest rates is inflation, and inflation is sitting at a 30-year high. So on top of the fact that our mortgages are now costing us more with increased rates, the price of everyday goods have gone up, and this double whammy is creating increased levels of mortgage stress, and we expect to see increased default rates through the course of the year. If inflation continues on its current path, then the experts think that we're probably heading towards a recession. And that would put pressure on the Reserve Bank to take some action. And that action would most likely be to start to cut the cash rate. So that would be one way to see mortgage loan repayments start to come back down. The banks predict that the Reserve Bank may in fact cut rates by between 50 and 200 basis points. In other words, 0.5% through to 2% of rate cuts. And they think that those rate cuts may start as early as the last quarter of this year and through into next year. I would offer a word of caution about banking on large rate cuts. It's a long way off and lots can change. I would counsel you all on assuming that rates are going to get to 5.5%, and we need to find a way to have the loan affordable at that level on an ongoing basis. If rate cuts come through, then fantastic, you'll have more money in your pocket. So really, what we're encouraging all our clients to do is to revisit their budgets, look for ways to be able to afford to put a bit more money in towards paying down their home loans now, build up a buffer to cover for the rate rises that are coming, and if you need to, come and have a chat to us. We'll start by reviewing your current interest rates, and we can have a chat about other strategies that might help you manage through the next year or two, which may be a bit bumpy. Hope this has been of some use to you. Please feel free to share with anyone else who you know who might be interested. And we look forward to speaking to you soon. Have a good day. Bye.